Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Mike Reust, president of Betterment, to discuss retail investor portfolios, planning, and general market sentiment. Mike, it's great to have you with us. Welcome to TradeTalks.
Thanks, Jill. Pleasure to be here.
So Betterment recently surveyed 1,200 retail investors across the four major generations to get a sense on how they feel about their portfolios, how they feel about the market. Tell us about the survey and where Betterment sits in the retail investing ecosystem.
Sure. So I'll start with Betterment and then work towards the survey. So Betterment is an online wealth management platform. So we serve about 800,000 clients and manage about $40 billion in assets. So we're actually providing financial advice and managing those investments directly. So that's sort of where we're coming from. We launched in 2010, so we've been watching these behaviors and sentiments sort of over time. And as you can appreciate, right, in 2020 with the pandemic, things got a little choppy. Things got a little bit different. People started to change their behaviors. There was a lot of anxiety about the markets because through an investor lens, people were seeing a lot more volatility than they'd ever seen before. But sort of concurrently, a lot of new emerging asset classes were coming online and becoming more and more widely adopted. Think about crypto, think about fractional wine investing. Like there were all these new sort of options. And so it sort of became the Wild West very quickly. And some people stood on the sidelines because they were worried about volatility, and some people were running around day trading, investing in ways they hadn't before. Meme stocks took off. And so that was sort of an era, and we started to see on our platform that behavior start to shift a little bit. And I don't want to say return to normal, but some historic norms started to reemerge. And so we did this survey to look beyond our user base and what we were observing to try to gain some perspective on, was this something we were just seeing or something more broadly that was happening in the landscape?
So how are investors prioritizing planning?
So, well, if you decompose planning a little bit, there's the why, what am I investing for? Is it for retirement? Is it for a vacation? Like, what's the purpose? Versus what am I investing with? Like, how am I doing? Am I buying Bitcoin? Am I buying a diversified collection of ETFs? Like, what am I doing? What we were starting to see in that era is people were really focused on the how. There was so much new, interesting stuff happening that took a little bit of the focus away from some of the longer term planning. What our survey showed us is that people were actually returning a bit to that side. They were returning to the wait, what am I doing this for? And we saw a really big increase in people thinking about, okay, this is for retirement, this is for long-term planning. They were starting to pull a little bit out of the details again and think about what the purpose actually was. And so that was a big shift from just the prior couple of years.
So how have the trends evolved since the pandemic?
Yeah, so as we saw that shift where people started to think about long-term planning, we started to see a rapid decrease in interest in these new asset classes, right? Whether we're talking about crypto or some of the other emerging asset classes, again, because of performance, because I think a lot of people learned the hard lesson that perhaps their talents aren't best served as day traders, that they started to say, okay, take a deep breath, take a step back. Maybe I should think about, okay, this is for long-term planning. How should I approach this? And we started to see a renewed interest more in what we specialize in, which is traditional, long-term, diversified investing approaches. So we saw that sort of shift back in that direction. And that's in the survey, and we've started to see that actually in consumer behavior and flows over the past couple months as well.
And we'll get to that in a moment, because think about it, when Betterment first launched, right, in 2010, the market went from the bottom left to the top right of the chart.
Yeah.
And that trend was really consistent over the past 12, 13 years. And all of a sudden, you get the volatility in 2020.
Yeah.
Then we saw, back to the top right of the chart in end of 2021, 2022. I mean, there's just a period of volatility that investors never experienced before. So it doesn't surprise me to see a reversion to the mean, if you will. So what's market sentiment now post-survey?
Well, one really interesting detail you said, people have never experienced it before, because you're right, some of these people are young. Basically since 2008, they saw that sort of decent market condition their entire investing lifetimes. One of the cool details from the survey, though, is we saw this cross generations. So from Gen Z, millennial, and on up, consistent changes in behavior. So some people had never experienced it, and some people haven't experienced it in a while, but it was still consistent. I wouldn't necessarily have predicted that, so it was kind of an interesting outcome in the survey.
Yeah, that is interesting. Let's talk about high yield cash, because that demand has certainly been here this year, especially with interest rates as high as they are, and banks that are offering, I don't know, 0.2%, if even that much. But then you're able to get from fintech platforms or newer platforms 4+. So are you still seeing that being a dominant trend moving into high yield products?
Yeah. So everything I say about investing itself starting to recover, we're starting to see flows that are, we're starting to see multi-year highs return. So the historic norms sort of return. Cash is still very, very, very dominant, right? People are seeing those yields 5% plus on our platform and some others. And so they are leaning into that even more aggressively. And I think as long as rates stay high and the market, we've seen the sentiment improve. There's lots of different tracking indices about investor sentiment, bullish versus bearish sort of behavior. Those are at historic highs again, and so we're seeing that transition. But as far as I can see into the future right now, cash will remain dominant.
Yeah. So Betterment uses real-time Nasdaq pricing feeds to power its applications. Why choose Nasdaq, and what does it mean for your customers? What does it mean for the platform?
Sure. So in terms of our platform, right, we need to provide customers like just real-time balance data, price data, so they understand what's going on. We also are managing an entire trade execution system, so we need to have real-time market prices to understand what to do in that arena. And so it's very important for us to have real-time access to very robust feeds of prices that don't go down, that we can depend on, and Nasdaq is on that very short list that rises to that standard for us.
All right. Well, awesome. We look forward to the next survey. Great intel. Thanks so much, Mike, for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.